PEGs or perquisites and ATC based problems. Today I am going to present now. First of all, we can refer the provisions of the perquisites under salary. Perquisites: LIC premium, income tax, professional tax, or any bill paid by the company on behalf of employee, fully taxable in the hands of employee. Next one, rent-free accommodation. And for the rent-free accommodation, we have to apply the 3 steps. Step 1, first we have to refer the city and the size of the population. Because when population is less than 10 lakhs, 7.5% of salary was taxable in the hands of employee. When population between 10 lakhs to 25 lakhs, 10% of salary was taxable. When population exceeds 25 lakhs, 15% of salary was taxable in the hands of employee. So first step, we have to study the city and the size of the populations. Based on that only, we have to calculate the taxable rent-free accommodation, RFA. With that salary, we have to add cost of furnishings. In case when the rent-free accommodation is furnished accommodation, means the actual cost of the furnitures. In that cost, 10% we have to add with the percentage of salary. And in case when the furnishings are paid through rent, means the rent of furnishings 100% have to add. And less concessional rent deducted by employer from employee, if any, balance only taxable rent-free accommodation. And the third one, domestic servants engaged by employee but salary paid to them by the company, means that's 100% taxable in the hands of employee for cook, gardener, watchman, sweeper, etc. Fourth one, gas, water and electricity charges paid by company, 100% taxable. Fifth one, reimbursement of medical expenses in India, 100% taxable in the hands of employee. Next one, interest-free loan from company. In case of housing loan received by an employee from the company, as per SBI rate, we have to apply, and that amount was taxable in the hands of employee. For housing loan, 8.7% for female and 8.75% for male. And the personal loan, it may vary from the bank to bank. It starts from 11.55% to 14.55%. Anyhow, housing loan or personal loan or two-wheeler loan or car loan or educational loan, whatever may be the loan, the rate of interest will be clearly given in the problem itself. Just we have to apply that rate and we have to calculate the interest amount, and that amount was taxable in the hands of employee. Next one, PEGs in respect of use of irrevocable asset by an employee, except computers and laptop. The 10% of the cost of the asset was taxable in the hands of employee. All gift in nature up to rupees 5,000 was exempted. If any gift provided by the employer to their employee, if the cost of the gift exceeds 5,000, 100% taxable. Next, allotment of sweat equity shares by the company to their employees. The difference between the market value per share and the issue price per share was taxable in the hands of employee. Next one, motor car facility provided by the employer. Case A, when car is used for personal uses of employee, 100% taxable. When car used for official uses, 100% exempted, not taxable. If car used for both the official and personal use, if a car is less than 1.6 liter capacity, 1,800 per month for car plus 900 per month for driver was taxable in the hands of employee. If a car is more than 1.6 liters capacity, means 2,400 rupees per month for car plus 900 per month for driver. If it is a self-driven car, means no need to add driver salary. If a small car, 1,800 per month was taxable in the hands of employee. If a big car, 2,400 per month was taxable in the hands of employee. Case B, if running and maintenance expenses for private purposes are made by employer, Actual cost of the employer fully taxable in the hands of employee. If running and maintenance expenses for private purposes are met by employee means if a small car, that means the car does not exceed 1.6 liter capacity means 600 per month was taxable. If a big car, 900 per month plus driver salary 900, it's separate. Next, part 5, deductions under chapter 6a. Under salary we can claim deduction under section 80C, 80CCC and 80CCD. These 3 deductions were permitted from salary. So now let's see the provisions of the 80C. Qualifying amount for deduction under section 80C. Any contribution made by an employee to SPF or RPF or PPF fully qualified. LIC premium paid by employee or employer. This amount was also qualified for 80C. When calculating the qualifying amount for deduction in case of insurance premium, actual premium paid or 10% of sum assured, whichever is least, only qualified for deduction. Deposits made in ULIP means unit linked insurance premium or mutual funds or ELSS, equity linked savings scheme, or any term deposit fully qualified for 80C. Payment of tuition fee for 2 children of an individual also qualified. Investment in equity shares notified by CPDD, Central Board of Direct Taxes, this also qualified. Investment in Suganya Samriddhi scheme or NSS, National Savings Scheme, or NSC, National Savings Certificate 8th issue, also qualified. Term deposit within 5 years in the bank or post office schemes, also qualified. Investment in bonds of NABARD, also qualified for 80C. Last one, repayment of housing loan of LIC, HDFC, ATCO, or any government or semi-government institutions. The actual principal amount only qualified for 80C. So the overall qualifying amount is limited. That means ceiling is 1,50,000. So actual or ceiling 1,50,000, whichever is the least, was qualified for 80C. Next one, 80CCC, deduction in respect of contribution to pension fund of LIC. Actual annuity premium or ceiling of rupees 1,50,000, whichever is the least, is qualified for 80CCC. Next one, 80CCD, deduction in respect of contribution to National Pension Scheme NPS for government employees after 1/1/2004. Actual contribution or ceiling amount is 2 lakh, whichever is least is qualified. So first we already studied the basic part, allowances part and the pills part. Now I am going to insert the perquisite part and the deductions under section 80C part. Let me see some practice how to calculate deduction under section 80C. The practice 1. Contribution to RPF means recognized provident fund 15,000. Contribution towards NSE 8th issue 25,000. Insurance premium on own life 20,000. Sum assured is 1,50,000. LIC contribution towards the life of wife 5,000. Sum assured is 60,000. How to compute qualifying amount for 80C? Let's see. Contribution to RPF 15,000 fully qualified. Contribution towards NSE 8th issue also fully qualified. LIC premium, actual premium or 10% of policy value, whichever is the least. So actual premium is 20,000, but the policy value is 1,50,000 on the 10%. So 15,000 only qualified. Next one, LIC contribution towards the life of wife. Actual premium 5,000 and the 10% of policy value is 6,000, whichever is least, only 5,000 is qualified. So the total amount is 60,000 or the ceiling amount 1,50,000, whichever is the least. So 60,000 only qualifying amount for the first practice. The same pattern the listeners can practice exercise 1. Now practice 2. Calculate deduction under section 80C. Insurance premium on own life 20,000, policy value being 2,50,000. LIC contribution towards the life of wife 5,000, sum assured 40,000. Contribution to SPF, statutory provident fund. Contribution towards NSE 8th issue 25,000. Contribution to URPF, unrecognized provident fund. Please note this URPF contribution not qualified for ITC. Repayment of loan taken for purchase house from HDFC, rupees 40,000, including interest of rupees 18. In this case also, interest will not be qualified for deduction under section ITC. Let's see how to compute the qualifying amount for ITC. LIC premium, actual premium or 10% of policy value, whichever is the least, 20,000. LIC premium for wife, actual or 10% of premium, only 4,000 only qualified. Contribution to SPF, fully qualified. Contribution towards NSE 8th issue, also fully qualified. Repayment of loan taken from HDFC, principal amount only qualified. So the total 1,06,000 or ceiling amount 1,50,000, whichever is the least, 1,06,000 only qualifying amount for ITC. Note, contribution to unrecognized provident fund not eligible under section ITC. In the same pattern, you can practice exercise 2. Special notes. Meaning of salary. It is an important concept in salary. For HRA, RPF, basic pay plus dearness pay, DA which enters is called a dearness pay, plus percentage of commission on sales. Only these items consist meaning of the salary for claiming exemptions or any calculations for HRA and RPF. And for rent-free accommodation, salary means taxable basic part. That means basic pay, dearness pay, bonus, commission and all, except leave salary or any arrears of salary or arrears of bonus. Any advances of salary or advance of bonus are excluded. Plus taxable allowances part except DA and exempted EA for government employees. This volume will be considered as the meaning of salary for rent-free accommodation calculations. Okay.